Good day everyone, today is Wednesday, June the 1st. My name is Rafik Bajajan, currency analyst at xm.com, here to provide you with your Forex news update. The Australian dollar was lifted by better than expected GDP data today as the Australian economy continued to outperform other advanced economies. Australian GDP growth in the first quarter was 1.1% quarter on quarter, beating forecasts of 0.8%. The Aussie jumped 0.8% against the dollar to hit a two-week high of 0.7298 as traders pared back expectations of an RBA rate cut, but it was unable to hold on to its gains and slid to 0.7258 in late Asian session. Also performing strongly on Wednesday was the yen, which was driven by several factors. Risk of mood supported the Japanese currency at the start of Asian trading, but the yen got a further boost on the announcement by Japan's Prime Minister in Parliament today that the government will postpone next year's sales tax increase by 2.5 years. There is speculation that the sales tax delay will be complemented with an additional fiscal stimulus package of up to 10 trillion yen. Investors interpreted this as a possible sign that the Bank of Japan may not see the need for further monetary stimulus if fiscal policy is relaxed. The dollar fell to 109.64 yen after the announcement, while the euro hit a low of 121.99 yen. Market sentiment was weighed by disappointing Chinese manufacturing PMI today, which raised concerns of a faltering recovery in China. The official PMI was unchanged at 50.1 in May for manufacturing activity and was slightly above estimates of 50.0. However, the private Caixin PMI came in below estimates at 49.2 in May, which was lower than April's 49.4 and was the 15th consecutive month of contracting activity. The Chinese yuan weakened after the data, with the dollar hitting a 4.5-month high of 6.5941 yuan early in Asian trading before easing to around 6.59. The euro was firmer against the dollar on Wednesday, climbing to $1.1138 in late Asian session, but the pound remained under pressure and slipped below $1.45. Sterling fell sharply yesterday after two new polls showed narrowing support for the UK to remain in the EU. Commodities were mostly down today, with crude oil prices moving lower in cautious trading ahead of an OPEC meeting on Thursday. US oil futures were down almost 1% in Asian trading at around $48.65 a barrel. Gold bucked the trend though, as it benefited from the increased risk aversion and the slightly weaker dollar, which was hurt yesterday from mixed data out of the US. Gold prices were up 1.7% at $1,216.40 an ounce in late Asian session. Looking ahead to the rest of the day, UK manufacturing PMI and the final PMI readings for the Eurozone will dominate the European session, while in the US the ISM manufacturing PMI will be the main focus. Thank you very much for watching and have a great day.